Hello everyone, my name is Maxwell, and in today's video I'm going to show you how to make $500 plus a day, and of course every day. Now how you're going to make this money is through trading. Now let's look at the two types of trading that we're going to use. You will either trade as a forex trading or a binary option, which you will need a broker for. Now let's look at some similarities between the forex trading and then the binary trading, and then the difference between the forex trading and then the binary options. Now with the forex trading, starting from the similarity which has the X over there, the forex trading, forex are tradable on short-term time frame. Although with forex trading you can also take long-term position. You can take trade that lasts for 1 second. Now let's look at the binary option. Are tradable on short-term time frame. That is, you can trade 1 minute, 5 minutes, 30 minutes, depending on the trading platform you're using. Now with the difference between the forex and then the binary option, which is the D1, with the forex trading you don't know your ultimate risk and profit until you close the trade, but this can also be an advantage depending on your trading level, as the fixed risks and profits of binary options offer little flexibility in customizing risks relative to reward. With binary option trading is simpler than forex trading because there is no variability. Know your risks and profit potentials, and when the option expires you either lose or gain the predetermined amount that you invested. Now with the different D2, the magnitude of the price matters. You will need to pick the direction you think the price will move, but also need to assess how far it may go both for and against you. But with the binary option, the magnitude of the price move doesn't matter. If you buy the euro versus the US dollar, this currency pair, call option, thinking the price will rise in the next 1 or 30 minutes, it doesn't matter if the price goes up 1 pick or 100, you still get the full payout and are exposed to no risks. The amount you place on the trade if it drop 1 or 150 bits instead. Now with the D3 forex difference, that's the different D3 forex trading, you have 3 options. That's depending on the trading platform or the type of broker you're using. Now if it is a bullish trend, you can either choose a call, high position, an up position, or above. And then for the binary option, you have only 2 options. You can either choose a call, high, up, and above for bullish trend. And then for the forex, for bearish trend, you can choose the put, low, down, and below. And then for the binary option, you can choose the low, down, and below for bearish trend. But with the forex, after choosing the direction in which the market is going to move, you need to tell us how far it may go and for you or against you. Now there are 2 main candlesticks you're going to see on the forex market or on the trading. Now 2 main candlesticks are the bullish candlestick and then the bearish candlestick. The bullish candlestick both have a body, which is also known as the real body. With the bullish candlestick, the bottom of the body is the opening price, while the upper part of the body is the closing price. Both the bullish candlestick and then the bearish candlestick has a shadow. That's the line which extends upwards and then beneath the body. For the shadow that extends upwards, the bullish body or bearish body is called the wicks. On top of the wicks is the highest price achieved during the market section, and then below the body is another shadow which we call the tail. And then just at the tip of the tail, that's below the tail, is the lowest price achieved during the market. Now with the bearish candlestick, the upper part of the body is the opening price, whilst the bottom of the body, real body, is the closing price. And then the tail, the wicks of the shadow, and the upper part of the wicks is the highest price, and then the lowest part of the wicks is the lowest price. Now we are going to consider some candlestick which will continue as a pattern appearing in the trend. Now I would like to first talk about the Marubozu, bullish Marubozu. The bullish Marubozu, both the bullish and the bearish, they have no upper shadow or lower, and then the closing price is equal or the same as the highest price achieved during the market session for the bullish Marubozu. And then the bottom of the body is the opening price, which is the same as or is equal to the lowest price achieved during the market session. However, with the bearish Marubozu, the upper part of the body is the opening price, which is equal to or the same as the highest price achieved during the market session. And then bottom part of the body is the closing price, which is equal to or the same as the lowest price achieved during the security. Now the candlestick pattern, these are single candlestick pattern which will be appearing as you trade. Now I would like to talk first about the doji. Now the doji, we have 4 main types of doji. We have the doji itself, the gravestone doji, the dragonfly, and then the long leg doji. The doji shadow and then lower shadow. But with the doji, when the price opens, the session moves up and down and then closes near or virtually equal to the opening price. And then with the gravestone doji, whenever you see this, it tells you that during the market session the buyers took control over or dominated over the markets and then pushed price higher, but at the end of the session the sellers resurfaced and pushed push the price low. The dragonfly doji, whenever you see it, it means the sellers dominated over the market, push price lower, but at the end of the session the buyers resurface and then push the price higher. With the long leg doji, both the upper part and then it has an equal lower shadow and then upper shadow from the body. Now for each of these doji that you see, if you see a doji appearing at the end of an upward trend, it tells you a possible reversal trend. Suppose a doji or a gravestone doji appears at the end of an incline or an upward trend, it can mark the top or the resistance of the market and then a possible reversal trend. However, the same when a doji appears at the end of a downward trend, it tells you that the selling pressure is decreased and then the market is likely to reverse, or the market is likely to reverse to a bullish trend. Now let's look at the inverted hammer, then the hanging man, hammer itself, and then the shooting star. The inverted hammer appears at the end of a downward trend and it indicates a possible upward trend or a bullish reversal. With the inverted hammer, what it tells us is that during the market session, the buyers took control over the market, pushed price higher but could not close it all that high. However, the buyers still remain in the market and try to push price higher. With the hanging man appears at the end of an upward trend and then it tells you a possible reversal pattern or a possible downward trend. The hammer, the upper part of the hanging man has no or virtually no shadow, whilst the lower part of the body has a shadow, or the tail, which is the length of the tail should be twice the length of the real body for a hanging man, and then it tells you a possible bearish reversal pattern. With the hammer appears at the end of a downward trend, but you should know that both the inverted hammer, the hanging man, the shooting star, and then the hammer, the color of the body is not as important as the shape. Now with the hammer appears at the end of a downward trend and then it tells you that during the market session the sellers dominated over the market. However, at the end of the session the buyers resurface and push price higher than it opens. Now with the shooting star appears in the shooting position and it tells you that a possible reversal pattern, which is a bearish reversal pattern or a bearish reversal, is evolving. And then with the shooting star too, the upper part of the shadow should be twice the length of the real body and it has no or virtually no lower shadow. The same as the hammer, the downward or the below the body is a very long shadow which should be twice, the length should be twice the body of the candlestick. Now with the spinning top, the spinning top tells you that during the market session both the buyers and then the sellers were aggressive and both could not gain an upper hand on the market, and therefore it represents an indecision in the market. And then when a spinning top appears at the end of an upward trend, it tells you a possible reversal pattern, but you may need a confirmation to act on your position. Now another candlestick I would like to talk of is that the Harami. Harami means pregnant in Japanese language. Now with the bullish Harami, the right hand side of the two candlesticks should be of the green color, which is the bullish candlestick, and then the opening price is the bottom here while the closing price is the up here. And then with the bearish candlestick, the opening price is the upper part and then the closing price. Now look at the bearish Harami too. It has the right part is the reddish in color, which is the bearish candlestick, and then the right hand side is the green candlestick. Now the engulfing, with the engulfing too, the right hand side of the candle is much longer and tall, or is much longer than the left hand candlestick. And then with the bullish candlestick too, the right hand side of the candlestick is green and it is much taller than the left hand side candlestick. With the piercing too, the right hand side of the candlestick is a green or a bearish candlestick, and then the left hand side is a bearish candlestick, and then the right hand side a bullish candlestick. With the bullish first opening below the closing price of the bearish candlestick and then closing at the middle of the bearish candlestick. With the dark cloud cover, the bearish candlestick opens above the closing price of the bullish candlestick but closes at the middle of the bullish candlestick. Now with the morning star, the morning star also looks like this. First of all, a bearish candlestick appears and then a gap down forming another bearish candlestick, and then a gap up forming another candlestick which may or may not have the upper shadow or lower shadow. Now with the evening star too, we have the first part being the bullish candlestick, and then move a gap up, form another bullish candlestick, a gap down, form another bearish candlestick. Now when you see an engulfing candlestick, it tells you, now let me teach you how to blend this candlestick. First of all, you take the opening price of the first candlestick and then the closing price of the second candlestick. With this candlestick, you can see that over here is the opening price of the candlestick, and then the closing price of this candlestick is over here, meaning that this candlestick is a hammer, meaning that it tells you that when you see a bullish engulfing appearing at the end of a downward trend, it tells you that the market or the buying pressure is gaining, or the momentum is gaining to the upper side, and then the trend is possibly to reverse to an upward trend. Now with the bearish candlestick too, we are going to blend this candlestick. You just have to take the opening of the first candlestick and then the closing of the opening of the first candlestick and then the closing of the candlestick. So this tells you that when a bearish engulfing appears at the end of an upward trend, it tells you that the selling pressure is further increasing, meaning that the trend is going to reverse in a bearish reversal, and hence you need a confirmation to act. The same as the bullish Harami. When you see this Harami, just take the opening of the first candle, blend, you are going to get a hammer. So the bullish Harami appears at the end of a downward trend, and it tells you that the buying pressure is further increasing, or the momentum of the asset is gaining to the upper side, and therefore a possible bullish reversal pattern. The same as the bearish Harami. If you see a Harami appearing at the end of an upward trend, it tells you that the market is gaining to the downside. That means that the selling pressure is further increasing, and then the sellers are dominating to push the price much lower. Now let's take a close look at the spinning top. This is a chart I took from tradingview.com. so over here, just take a look. The trend was an upward trend, but a spinning top representing indecision in the market and weakness on the bullish trend, hence a trend reversal, but required confirmation before action. Over here, the trend was up and then a spinning top formed, meaning that the buying pressure was reducing, and then there was an indecision in the market. However, a candlestick, which is a bearish candlestick, which is very long, appears, meaning that now the selling pressure is increasing and then the momentum is gaining to the downward side. Now let's take a look at a doji. I said when a doji appears at the end of a downward trend, it tells you that the selling pressure has decreased or has been reduced, and then it tells you and it gives you a sense of indecision between the bulls and the bears, therefore resulting in a standoff, and in this case weakness among the bears. That's the bearish candles or the selling pressure. And then when a doji appears at the end of a downward trend, it tells you that the market is going to move upwards, or the buying pressure is going to increase. So at this point, you can call or choose higher depending on the trading platform you're using. Now take note, both the spinning top and then the doji needs a confirmation of the trend reversal before action, of which may come from a gap up of downtrend. That's a gap up in this case. For this doji, a gap up forming, meaning it confirmed that now the trend is going to move upward. And then for the spinning top, a gap down, which over here it forms over here. Now let's take a look at a hammer too. A hammer appears at the end of a downward trend, and it tells you that the selling pressure has been reduced, and then the momentum is further gaining to the upside, and then the buying pressure is going to increase. But the hammer indicates that the selling pressure the sellers dominated during the trading session. And so whenever a hammer appears at the end of a downward trend, take a close look at the lower shadow or the lower part of the shadow. You can see that for this one, the lower part of the shadow is twice the length of the body, confirming that yes, the sellers dominated during the market session, but however could not close the market high, and then the buyers pushed the price very high, and then the momentum is further going to gain to the upside. So whenever you see a hammer at the end of a downward trend, you can call or choose high or above depending on the trading and then the time frame you are using. You have the inverted hammer, imply the selling pressure is decreasing and buying pressure is gaining to the upside. The momentum of the asset is moving upward, hence bullish reversal trend. It forms at the end of a downward trend but requires confirmation before action. This may come from a gap up or long bullish formation. For this case, this was it, a long bullish formation, and then it gave a gap up after the inverted hammer has been formed. Take a look close, it's twice the length of the body. Now the next candlestick we are going to talk about is the shooting star. The shooting star appears at the end an upward trend, and it implies that buyers dominated during the market session and pushed price higher. However, at the end of the trading session, the sellers resurfaced and pushed price lower, meaning this candle's formation signals a bearish reversal but needs confirmation before action. This may come from a gap down or long bearish candle formation. So for this case, you can see that the upper part of the shadow, the length of it is twice the length of the real body over here, and then we had a long candlestick which was a bearish candlestick forming, telling us that the momentum is gaining to the downside, and then the selling pressure was further increasing. So at this point, you can choose low, and then depending on the trading platform you're using, either below, or you can choose puts depending on the trading platform you're using or the type of broker you're using. Now, a hanging man implies buying pressure is now there's another hanging man too. So as I said, the hanging man implies that the buying pressure is further reducing and then the selling pressure is increasing. So if you see a hanging man appearance at the end of an upward trend, it tells you that you need a confirmation, and then it tells you that the pressure is getting to the downside, and then the selling pressure is further increasing. Now that's another hanging man to confirm. So over here we have another hanging man, and then there was a gap down confirming that really the buyers couldn't push price very higher, and then the sellers was gaining an edge on the market, and then the momentum was gaining to the downside. Now this is a detailed check pattern of the bearish trend and then a detailed check bullish trend. Now at this point we can put, after a long bullish candlestick forming, we are having a bearish candlestick forming, which in this case look like a doji, meaning that there's a possibility of this trend breaking in the down. We have to wait for a confirmation because the trend is on upward trend, as you can see, an upward trend. So a doji forming at the other says that the buying pressure is now decreasing or has decreased, but we still need to wait for a confirmation of a reversal pattern. As you can see, still the buying pressure is increasing. It will be a good time at this point to put. So now it will be very good at this point to choose put because the market has started decreasing. So now we bet $100. So if it expires, then we are going to get $85 in addition to $100 just in 1 minute. This is a 1 minute time frame. As you can see, I just used it 1 minute. So as you can see, the market is still decreasing, so we are winning, right? Just in 1 minute you are going to get $85. In the next video I'll be showing you how to use the relative strength index, which is the same as the RSI. So I use it as a confirmation, and then now I want $85 in addition to my amount. Okay. So we need to go for another trade to make sure we win. We confirmed that it was going to decrease because a doji formed here, and right after the doji, a bullish candlestick formed. I couldn't push price all that high, but the doji forming or the bullish candlestick tells us that the buying pressure is decreasing. So on the 1 minute time frame, you can choose the put so that the sellers, just to tell us that the selling pressure has increased. So at this point there's a break back up again, meaning the buying pressure is now increasing. Over here I have trading view providing me with a clear chart. That's a candlestick chart, which I get tradingview.com is providing me with the candlestick chart, which is more clear that I'm using right now. So we have another bearish candlestick forming. Then at this point we can clearly confirm that the market is still going to decrease, right? So we wait for better confirmation, then we select the put. Let's wait for better confirmation. Okay, that's another bearish candlestick forming. At this point we can still choose the put. It's going to win. At the end it is going to close a lower price, so we observe it from the trading view. We bought at this point, then we are expecting the market, the selling pressure to increase. So there is a 1 minute. So as you can see, we won that trade too. Over here we won it. We won another $85 in addition to what we already do. Now we won another $85 in addition to the first $85 that we won. So we really understand the candlestick from the basics I've taught you, and then you incorporate them. You can trade at any amount, just put in the amount. This is an IKO option, a broker I'm using. You can use any other option, but make sure it is properly regulated and then there's a trusted source. Thank you for watching, and don't forget to subscribe. Bye.